Hello, everyone. As we approach the midway point of 2024, just wanted to put together a really short video touching on a couple of important investment themes, giving a bit of a recap for the first half of the year. So I would say the first key thing that's happened has been the strong performance of the US stock market. As of this recording, the last week of June here, the US market's up about 14 or 15% so far this year. A lot of that has been because of the strong performance of a lot of technology, large technology stocks. And one of the best examples of this, or probably the poster child of this, has been NVIDIA, which is the maker of the high-end computer chips, these GPUs that are used for artificial intelligence. It's grown just incredibly strongly over the last couple of years, especially over the last number of months. NVIDIA actually became the largest company in the world by market cap, so the value of its shares, surpassing both Microsoft and Apple, which was quite impressive. So that's been part of the reason why the US market has done so well this year. A second piece, I would say, the Canadian stock market has also posted gains, but it's underperformed the US quite significantly. So the TSX Composite Index, which is the major Canadian stock index, is up about 4% so far this year. So it's done okay, but significantly trailing the US. Some of this has been because we just don't have as many large technology companies in Canada as they do south of the border. And in addition, some of the energy and material stocks have performed quite poorly over the last couple of months. And the third piece I would say that's been important this year and maybe a little bit surprising has just been how steady interest rates have been. So the Bank of Canada cut it's the benchmark interest rate by 0.25% earlier in June, but that was the first interest rate reduction either in Canada or the US so far this year. And a few months ago, the expectation was that there would be a number of interest rate cuts in both countries during the year. So we'll see what happens over the coming 6 months. Again, the expectation is some interest rate reductions, both in the United States and probably a couple more interest rate cuts in Canada as well. But that's led to fixed income returns being relatively low, relatively muted. They've been positive. Bonds have done okay, but not significant positive performance. So I think when you combine these three key themes of the first 6 months of the year, which is US stock market doing very well, Canadian stock market positive but underperforming, and bonds or other fixed income investments doing okay but not incredible, you end up with a pretty boring first half of the year from an investment perspective, which is just fine. Returns have been positive, and we approach the middle part of the year with things going relatively well from a financial markets perspective. Would like to wish all of you a happy Canada Day and Canada Day long weekend, and hope that your summers are safe and enjoyable. And as always, if you have any questions or anything that comes up, please don't hesitate to reach out. Bye for now.